Welcome to our 2Q FY19 results call. All our businesses have shown satisfactory growth in revenue terms for the quarter. We have now started reporting our India business, excluding the Forex division, which has been demerged into Cox and Kings Financial Service Limited. In spite of that, we recorded a 13% year-on-year growth in net revenues in India, and we have already started initiating steps to increase our B2C share in our India travel business. You will all probably know or have seen that we have signed Anushka Sharma as our brand ambassador and have had an extensive marketing campaign around that. We also plan, as we had mentioned last time, to curate holidays around experiences for both domestic and international destinations. One of the initiatives that we are promoting is the Kumbh Mela, where we anticipate that we should, pretty much sell out both in the domestic and international market, where we have, our tents in the Kumbh itself, and we've done this 4 times, so we have a lot of experience doing this. While we embark on our journey to increase our B2C business, we continue to take up opportunities in the B2B space, especially in MICE, and I believe we will continue to invest in our India business for a couple more quarters to further our presence in the B2C segment. Our leisure international operations have recorded a good performance this quarter. We've been expecting strong traction in Dubai with constant currency growth of about 17%. Remember that we use Dubai as the hub to book our worldwide contracts with clients coming out of China, Australia, all over the world through Dubai. And our US and UK business grew about 5% in constant currency terms, which we are very encouraged by. The Dubai growth was 17% in constant currency growth. Mininger has also shown a strong growth. It reported a 27% growth in gross revenue in euro terms. And you may have seen our press releases, but we opened our new hotel in Milan with 475 beds, our 7th hotel in Berlin with 847 beds. And both of these were during the quarter. And we witnessed an EBITDA growth of 7% in euro terms in quarter 119. We also closed the quarter with about 12,000 beds, which is nearly 40% higher than second quarter 18. Basically, such a large-scale expansion has led to a temporary margin dilution because, we sort of slipped very slightly in terms of receiving approvals for new hotel launches, and that has led to some postponement in revenues. This situation will normalize next year onwards when we have a higher mix of more mature hotels, which obviously operate at a higher margin. You will all be aware that we made the announcement on the 26th of October that we had signed an agreement to sell our education business to Midlothian Capital Partners, which is an investment fund, for an EV of 467 million. We are happy to demonstrate through this sale the value of the education asset, which in our opinion was not rightly getting reflected in our stock price. The deal should be completed by the end of this month, maybe slip into, by the second week of December is what we're anticipating in terms of where we are. Primarily because the only last, not hurdle, but the last event is that it's been filed with the European Commission in Germany, and that traditionally takes 4 weeks at the outer level. So this is a tick box. We are pretty sure that we should not have any, obstacles there because we've done this now 3 times, including with camping and with our sale of Explore in the past. So we're very familiar with the process. Obviously, this ties in very clearly with what we've reiterated now last quarter and again this quarter, that it should help us to deleverage our business, and then permits us to have a very strong focus with full management focus on, growing the market in India, particularly in the B2C segment. What is good is that we are pleased that we have more than recouped our investment for acquiring HBR in 2011 and still have Mininger as part of our portfolio. So all in all, I think it's a pretty good, vindication of our strategy to date. I would like to hand the call over to Anil for his opening remarks.
Thanks, Peter. I hope you all would have seen the presentation uploaded on our website. I will also some brief comments on the business and the working capital situation. As Peter mentioned, we have demerged the foreign exchange business, and hence all the numbers that you see are excluding the foreign exchange business. While the receivables have increased against the backdrop of the increase in corporate and MICE business, we have managed our working capital quite effectively in the India business. With this, I would like to hand over the call to the operator to conduct the Q&A session.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question at this time may press star and 1 on your touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question at this time, please press star and 1 on your touchtone phone. We have a first question from the line of William Humphrey from Waverton. Please go ahead.
Hi there. I was just wondering what date you expect the financial services businesses to be listed, and also if you'll be publishing the full financials for the company prior to the listing. Thank you.
William, can you repeat that, because that was very unclear. We couldn't hear you fully.
When do you expect the financial services business to be listed, for trading to start? And also, will you be publishing the full financials for Cox and Kings Financial Services, the FX business, prior to the trading date?
William, we will be submitting a detailed IM to both the stock exchanges, the BSE and the NSE shortly. And we will also be uploading the information memorandum on the Cox and Kings Financial Service website. That I expect it to be done in the next 7 to 10 days. We expect that the process of listing of the Cox and Kings Financial Service should be done next month.
Next month. Okay, thank you.
Thank you, sir. Participants, to ask a question, please press star 1. We have a next question from the line of Shalini Gupta from Quantum Securities. Please go ahead.
I'll do it. Yeah, that has to be.
Shalini Gupta from Quantum Securities. Ma'am, your line is unmuted, please.
Yeah, okay. Yeah, good evening. I just wanted to check, with the transfer of the education business, what kind of a reduction in balance sheets do we see? For example, how much will the fixed assets be reduced by goodwill, working capital? Then, a couple of these kind of things, if you can give me.
Yeah, Shalini. I would actually advise you to, just be a little patient. We will release the pro forma financials once the deal gets completed. So, you will have a better picture of the balance sheet and the...
Yeah, but...
on the balance sheet, I can tell you that, there will be adjustments to the fixed assets and the goodwill. And then on the liability side, you will see the net worth increasing because there will be a gain that we will have to book on the sale. So hence we will see an increase in our net worth. But the actual amount by which these changes will get reflected, we will release a pro forma financials which will lay out everything very clearly.
Okay. And same thing for the forex business. So we have a sense that top line that will leave the Cox and Kings P&L will be about 100 crores. Is that correct?
So Shalini, this quarter's numbers, if you look at the BSE filing, all the numbers are excluding the forex business because the demerger has been approved and the forex division has been demerged, and it is effective April 1st, 2017. So if you look at the BSE filing, then all the numbers that we have published is excluding the forex business.
Okay. Then a few questions on Meininger. Like if you can give the number of rooms end of quarter, then the pricing and for the quarter.
Sure. So we ended the quarter with about 12,000 beds, and the average bed rate was 32.7 euros.
And if you could just...
And the occupancy was 79.3%.
And this 32.7 euros, that seems to have been the rate probably through the first half of the year. Would I be correct?
Yeah, so typically in the first quarter, that's the peak season, so the rates are better. And in the second quarter, it comes down marginally. And so as we progress during the year, the bed rates reduce marginally. But the first quarter is the peak as far as the bed rate is concerned.
So this would be how much increase YOY?
It's 1.3% increase YOY.
1.3.
Yeah, and the other thing you should keep in mind is as we keep opening new hotels, initially the bed rates are lower than our average rates. So as we keep adding more and more beds, as that ratio increases, you will see the blended bed rate coming down. But over a period of time, that gets recouped and you will see an uptick in the bed rate.
Okay. Yeah, that's all from my side. Thank you.
Sure, thanks.
Thank you. Participants, to ask a question, please press *1 on your touchtone phone. We have a next question from the line of Josias from Saga Tree Capital. Please go ahead.
Hi, my first question is on when will this education sale be done? I missed out what Peter said during his opening remarks.
So basically everything has been cleared. We have had to file this with the European Commission, which was filed this last Friday. And it does not take more than 4 weeks. It's a formality tick box. It can happen earlier as much as 2 weeks, in 2 weeks. So we are just waiting for them to come back to us on this. And as soon as that is done, then the monies will be in our account.
Okay, thank you. My second question is on the working capital in the India business. So I'd like to ask about the internal process with regard to the collection cycle and being stricter with the client. So how has that panned out during this quarter? What have you guys seen during the quarter with regard to collection?
Yeah, so Joseph, I think, as far as the collections is concerned, it continues to remain sluggish. It improved a little bit in the June quarter, but it continues to remain sluggish now. We are making all-out efforts to improve our collections. But at this point of time, I think, there is no fresh update that we have. We think that, this sluggishness will continue given the situation in the Indian markets.
Okay. The question also on Meininger. So just like to understand, you guys are scaling up quite quickly, right? So how do we ensure that we provide a uniform experience as we scale up? Can you talk also can you also talk about some of the challenges you may face during this scale up period?
Yeah, see, we have standard practices which we follow whenever there's a new hotel launch. Right, so it is not a new thing. We have been doing this over the years. It's got accelerated a bit in the last couple of years. So I think, we have followed these practices and, we continue to, ensure that all launches happen and the quality is not diluted and the customers get a uniform experience. I would like Peter to add on to this.
Basically, we have a pre-opening team which does the recruitment, the staff recruitment, puts the processes in place, etc., 6 months prior to the hotel opening. And our new Chief Operating Officer has actually come from Radisson. Thomas has opened over, I think, close to 250 hotels all over the world. So he's very cognizant with, the systems, procedures that he has to bring, and he's brought a lot of discipline to us, which is why we've been able to sort of ramp up at this level and go, head first into operating fully from day one. So we put a lot, you've seen, and this was a question that I was asked, I think about a year and a half ago, was why were your expenses increasing? And if you remember, we increased it in the head office, and this was particularly one of the areas that we invested in, which was to get the right personnel in to deal with 100% growth rate, over a 3-year period. And I think we were successful in doing that. And obviously, you are most welcome to try any of our miningers to see how the consistency has been rolled out in each of our properties.
Okay. And with regard to the delays in some of these hotels, is it a specific, are there specific hotels that have seen delays, or you are seeing delays all across the board?
The delays were not on our part, and they were all on because the permissions didn't come through or the developer had a slippage. And let me just explain, there are 2 impacts of that. One is that we have got a commitment which is part of our contract, which forces them to pay penalties. So by the end of the year, we should have been able to charge them penalties for not opening up on time, which should positively move the needle on the EBITDA. And secondly, it does cause a dilution because, we are so successful in selling our properties, 18 months in advance, that we had to then place some of these clients into other hotels. So that's why there was a slight suppression on the EBITDA, but we expect to recover that in the last quarter because the terms of our contract allows us to charge them penalties every month they delay. They have to pay us cash out. So that's the effect. It was no issues with Mininger that these openings were delayed. They were local permissions or whatever. It had to do with the developers, not us.
So can you share which hotel is this?
It was in Berlin and one of them in Italy.
Okay, so you're saying that you have already taken some of the hit this quarter, but the penalty, you get back some of the money towards the end of the year.
We should get back pretty much all of the money by the end of the year because it's a scale that they pay us a penalty per day of not delivering which is based on like a 70% occupancy at a certain rate. So we should be able to recover most of it back. And AIG, there was some problem with the plumbing, and AIG, who's our landlord in Italy, has already accepted the claim, and the Berlin guy has also accepted the claim. So we don't anticipate any problem with recovering the cash. But that was the reason why there was a slight dilution.
Is the dilution only this quarter or next quarter as well?
Josiah, you'll have to repeat that question, please.
Oh, you talked about this dilution, right? Is it going to happen next quarter as well?
No, there's no other delay. At least in this quarter,
okay.
The December quarter, there's no delay.
Okay, my last question is, can you maybe talk about some of the key drivers for this Leisure International going forward?
I think the key drivers, I think that if you look at the mature markets like UK, USA, we are very happy with the 5% growth that we're having. But in Dubai, what we're acting at is not just the inbound, outbound, but we've made it our DMC hub to handle clients from all over the world. So say we did like 200 Chinese groups this year to Europe. Dubai actually fulfills that whole request. There's no point us doing it out of India. So that is where we are seeing the strong growth coming out. And we've now got several international clients out of Australia, out of China, out of Taiwan, out of Korea, and obviously some European clients. And basically that has now become our DMC hub to quote for, cross-border. So you're coming from China and you want to go to Europe, we'll handle it out of out of Dubai. And that's why we're seeing growth in that particular area.
Thank you.
Thank you, sir. We have a next question from the line of Naitik Modi from OHM Group. Please go ahead.
Hi, thank you for the opportunity. My first question is on the education business. We've seen a 18.5% growth. Despite of that, there's been a severe reduction in margins. Could you please explain?
Naitik, there were certain expenses that we incurred during the quarter, because of which the margins were under pressure in the education business. But we've already announced the sale of the education business.
So are these one-off in nature?
So it's not going to impact our numbers going forward anyway.
Okay. And and how does the growth? I mean, the growth has been significantly higher than what we've been doing in the past few years.
You're talking about the education business?
Yeah.
Actually, not. If you look at the numbers, for the past couple of years, we have been growing in that range, 4 to 5%. So there's not been any acceleration, except that we had 2 new centers which came up this year, because of which you are seeing that bump up in revenues. And also NST, EST have done better during the quarter, especially in the second quarter. Also in the first quarter, they got badly hit because of the lack of Easter holidays. But the second quarter, NST, EST has done well. Hence, you are seeing the overall revenue growth being quite strong there.
Okay. And on the leisure India margins, they are also coming off. So what is the reason for that?
It is primarily advertising expenses. Like we said, Peter mentioned in his opening remarks, right? So we've had Anushka Sharma as our brand ambassador, plus we are advertising on, you would have seen our TV commercials, print ads, all that. So we are gearing up for the next holiday season. We continue to invest there.
Okay. And what is the gross debt as of September quarter, end of September quarter?
It's around 4,000 crores.
Okay. Is this the same as it was in March?
Yes, it is stable.
All right. And any updates on the hiring of a new team for the CK Financial business in terms of the lending business?
Hi, this is Peter here. Basically, the entire business, including the board, has we've already identified the CEO who's been hired but is currently employed and working out his notice period. As of the same with the CFO. However, the HR teams, etc., are all in place. Basically, as you know, we'll be up and running in 2 weeks. And the whole board of directors also has been appointed, and only one of them we are waiting for RBI approval, finally, because they have to apply all directors. But so basically, the board will have 1, 2, 3, 4 independents and just one person from Cox and Kings. So effectively, our idea is that as soon as they are companies up and running, then they'll do their individual sort of meetings with fund managers, etc., so that you can evaluate what their strategy is going forward. Obviously, the Forex business will be a huge focus in the next, couple of years, considering that business is growing very significantly, and it couples with the tourism and corporate traffic growth. On the NBFC side, we've always stated that it will be a very select group that we lend to, and it should be our existing clients. I think that is the strategy that the new management will follow. But I think that we have to give them a chance to express and define their own strategy, and we will ensure that they interact with you all directly.
Okay, that was helpful. Thank you.
Thank you, sir. Participants, to ask a question, please press *1 now. We have a next question from the line of Alek Dalal from 130 Capital. Please go ahead.
Hi everyone. Just trying to understand the margins and how we should think about the margins going forward on each of the businesses. If you could just give some color on those for Mininger, Leisure India and Leisure International, that would be helpful.
Yeah, hi Alex. So on the India business, like we said, we'll continue to invest in the next couple of quarters. So I think on a YOY basis, you will see about 100 basis point or so lower margins compared to last year. It also depends on how well we are able to grow the B2B business when we are building this scale in B2C as well. But for now, I think we expect about 100 basis point decline. In Mininger, I think we should see about a 50 to 100 basis point decline on a YOY basis because of the reasons that we cited. We will recoup some of that by the end of this year, but we'll have to see the timing when we will receive the compensation. Sans that, I think we should see about a 50 to 100 basis point decline in mining margins, which again we think will recoup more than adequately in FY20, given that we will have a smaller proportion of new beds coming up. So we'll have more number of beds which will be mature, which typically have higher margins. On the leisure international business, the first half has been quite good. Margins are quite high compared to last year. We would like to, believe that this could remain, this would continue the way we are growing now. But I would not hazard a guess at this point of time. In my view, the margins probably in the leisure international business will be higher by about 100 to 150 basis points. Could be a lot more higher, but as of now, we would like to state that it will be about 100 to 150 basis points higher.
Okay, and just for the leisure India business, what is the sort of margin that we had last year, excluding CTF as well?
Sorry, your question is, last year, what was the margin in the leisure India?
Yeah. What is the base we are working on vis-a-vis this 100 basis point lower margin? That's what I'm trying to understand.
Right, so our margins were around 40% last year.
Okay, got it. And just a quick housekeeping question. The net debt at the end of the quarter was?
It was 2,300 crores.
Okay, fine. And sorry, on Mininger, the number of beds you ended with was 12,000. What is your target for ending FY19?
So I think we will end with around close to 14,000 beds. We'll probably hit the 15,000 mark by May 2019.
Understood. Okay, thank you.
Thank you, sir. We have next question from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Thank you very much, sir, for the opportunity. Sir, you mentioned your gross debt is about 4,000 crores, net debt about 2,300 crores. So given this education business that we have sold by FY19 end, what's the debt level we are currently looking at?
So with the education business sale, we should be able to get around 253 million pounds, which will be approximately about 2,300 to 2,400 crores. All of it will go towards reducing debt. On top of that, we'll try and see, to tighten our working capital and eke out additional resources to reduce debt as well. But from the education business sale, we should be able to get about 2,300 to 2,400 crores of cash.
Right. That is basically 51% of the total enterprise value, like this 253 that you mentioned?
Yeah, that's an approximate calculation.
Approximate calculation. Okay. Understood. So that effectively means we'll be debt-free, right, on the net basis by FY19 end?
Yeah, but in our case, I think you should look at gross debt because that's a more relevant number because a lot of times we have customer advances which are lying with us. So hence, I would advise you to look at the gross debt number. So we'll be having around close to 1,500 odd crores of debt. Probably, hopefully lower by end of this year.
Right. And you expect this basically the entire fund to come before FY19, right? March? Certain. But
by next month, we should be able to get down.
By next month, we will be able to get. Okay. And this business that we are selling, can you throw some light on what sort of EBITDA that this business was kind of generating for us?
It did an EBITDA of around 28 million pounds. In FY18.
Okay. And at the PAT level?
We have not shared the net profit numbers, but the valuation was around 17 times EV/EBITDA on a historic basis.
Okay. And revenue was close to about 1,400 crores of this business, right, in FY18?
It was about 170 million pounds.
170 million pounds. Sure. Thank you very much.
Thank you, sir. We have a next question from the line of Rajesh Agarwal from Money or Investments. Please go ahead.
So once the CKFAS is running, up and running, do the MICE customers will shift there and will fund it from there for their loan, or the receivables will still be the same?
Rajesh, it will be, we will continue to do it in CNK. It will not be done out of CKFAS.
It will be in CNK only. Okay. And when you say we will have 1,500 crores of debt, still we have got collection receivables of 2,200 crore now. Will that come down?
Yeah, so if you're asking me that debt will be 1,500 crores and the receivables will get converted into cash over a period of time, then that is right.
That's right.
Yeah, because if you look at our history, we have not had a single rupee of bad debt.
That is understood, but what is the time frame for that, sir?
There is no time frame. It all depends on the business mix of B2B and B2C, how we go forward.
Still any guidance how much it can come down by? No.
See, we are making all out efforts to, be as stringent with collections as possible. So we are just hoping that, things ease out a bit, and then, we can continue on the path of reducing receivables. So in the June quarter, like I said, we reduced it by about 120 odd crores. So we are hoping that we'll be able to do that, going forward.
Okay. September quarter it has reduced? No.
No, September quarter it has actually increased.
And what is the outlook for the business Leisure India?
So we will grow at around 10% this year.
Okay.
In terms of top line growth, and like I said, the margins will be about 100 basis points lower on the YOY.
Thank you, sir.
Thank you. We have a follow-on question from the line of Josiah from Saga Tree. Please go ahead, sir.
Hi, just wanted to clarify on this gross debt number. So the gross debt was 3,700 crore it was 3,900 crore in Q1, and now you're saying it's 4,000 crores, even after excluding the FX business.
Yes, that is right.
So you gain around 300 crores of debt, net.
Yeah, it's about 260 crores.
Okay, so you gain about 260 crores of debt due to working capital this quarter.
Yes, that is right.
Okay, can you also share your average number of dates for this quarter?
I have not computed that, Joseph, but it varies from, customer to customer. Depends upon, how large the customer is, what industry segment they belong to, what is their solvency and liquidity condition. So it all depends on, various parameters. But I'll compute the average days, DSOs, and I'll get back to you on this.
Okay. No, for Meninger, right, what's the average bid for this quarter?
You're talking about Meninger?
Yeah, what's the average number of bids for Q2?
Beds, okay, it was 11,949.
Oh, that's the average. That's not the ending number. That's the average number.
I'll have to get back to you on this, Joseph. I don't have the average,
okay.
But I have the
okay.
ending.
Okay, thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments. Sir, over to you.
Thank you for joining this conference, and obviously Ganesh and all of us are open to having individual calls if you all need any more information. Thank you very much.
Thank you very much, sir. Ladies and gentlemen, on behalf